Hello and welcome to the day ahead. It is Friday, the 26th of June. I'm Nadine Blaney. The local market is set to open fairly flat with ASX futures up a slight 0.1% to 8,755. Stock markets were mixed overnight as investors weighed strong earnings from parts of the AI supply chain against growing concerns about who ultimately pays for the massive investment that is driving the AI boom. The Dow Jones gained just marginally, the S&P 500 little change, but the Nasdaq fell about 0.5% as weakness in mega cap tech stocks offset strength across the semiconductor sector. Apple soured more than 6% after lifting prices on its iPads and iPhones to offset higher memory and storage chip costs. Nvidia, Microsoft, and Alphabet also eased. In contrast, Micron surged almost 16% after delivering better than expected earnings and guidance, helping lift the broader semiconductor index by more than 3%. Qualcomm rose close to 5% after reporting that it expects $15 billion a year in sales from its data center business by 2029. And JP Morgan shares jumped as succession planning hints at more years of CEO Jamie Dimon. The key macro takeaway was a stronger than expected U.S. economy combined with sticky inflation. U.S. inflation pushed above 4% in May for the first time in 3 years, reinforcing expectations the Fed Reserve may need to lift interest rates again before year end. Supporting that view, final first quarter GDP growth was revised up to 2.1% from 1.6%, while jobless claims pointed to continued labor market resilience. Federal Reserve Bank of New York President John Williams said that while inflation pressures are likely to moderate this year, they remain too high. And the Fed's Austin Goolsbee said he saw a glimmer of hope in the latest inflation data, but that inflation pressures are still too high and trending the wrong way. Despite that, U.S. Treasury yields fell with inflation coming in lower than feared at the headline number. Benchmark 10-year notes fell to 4.394% after earlier reaching the lowest level since May the 8th. In currencies, the US dollar fell against its major peers but remained near its highest level in a year. The euro moved just a whisker above a 13-month low, while the Japanese yen was near its lowest in 40 years against the dollar, with more intervention widely expected from Tokyo, perhaps even today. To the commodities complex, which weighed on our market yesterday, oil prices edged higher but were still near levels last seen before the start of the U.S.-Israeli war on Iran, as expectations of rising supply from the Middle East outweighed demand concerns. Brent crude futures settled up 2% at $75.26 a barrel. Gold bounced back above 44,000 an ounce on that lower dollar and treasury yields. And after dropping to 58,000 US, Bitcoin sitting below that 60,000 level still. In the absence of local economic data this morning, investors will turn their attention to the local market as weakness in Wall Street's tech sector weighed on sentiment, as we had said. In particular, we'll be watching the gold space and the energy stocks as well. Well, that does it for the day ahead. I'm Nadine Blaney. We'll see you next week.